All right, here we go. So the first thing that I'd like to do, I'd like to go over what you guys can expect for this test, just kind of an overview of what the test will be like. And then after I'm done talking about those things, you guys feel free to ask any questions. We can review any principles or anything like that that you guys feel uncomfortable with or that you'd like to just cover a little bit better. So first off, the time limit for the test is 1 hour and 50 minutes. So it's online, it's on your own computers. There are no materials allowed. So it's closed book, closed note. You can use a calculator or an open blanket Excel spreadsheet and put in formulas or do your statements that way to copy and paste into your test. But closed internet, all that stuff. The test has 43 problems total. The first one is an honor statement. You just put your name saying that you will not utilize any outside resources. Then there are 11 multiple choice and true false questions. There are 25 short answer or fill in the blank questions. And then there are 6 problem questions at the very end. The problem questions, they tend to be a little bit longer than the rest of the test. So if you are not good at timed tests, I would suggest starting at the end with those problems because they are worth the larger amount of points. And start there and then wrap back around and get to the rest of the questions if you're that kind of a test taker. So for the problem questions, the things that you need to be able to do is to calculate the after-tax yield. And that's simply like this company has made $5.6 million in net income, and they are in a 23% tax bracket. What is that after-tax yield on the income? Things like that. One of the bigger problems, you need to be able to create an income statement. So if you remember, chapter 3 was all about the income statement, what goes on it, what it's used for. There's a good example of an income statement on page 85. I would recommend reviewing that just to familiarize yourself with the different line items and where they are supposed to be. One thing that I've seen in previous semesters is some of the students will put certain things that should be an expense in the revenue section, or they'll put something that should be in the revenue section in the non-operating income section. So if you remember, the layout of the income statement is revenues followed by expenses, which will then determine your operating income, after which you list your non-operating income, followed by net income, which is the bottom line.
Does it matter what order the items are in each section?
You know, there's kind of an order, but I don't think that there are any rules saying which order it needs to be in. Generally, you'll have your patient service revenue first, and then other revenues, premium revenues, things like that. And then in your expenses, generally the items are listed from greatest to least. So your biggest expense down to your lowest expense. Your biggest one is typically salaries and expenses or wages and benefits, one of those two things. But for this test, the expenses, I don't really care what order they're in. The revenues, not so much either, but probably put patient service revenue first.
Okay, thank you.
You're welcome. One thing I do want to highlight for you guys, since you're here, is that provisions for bad debt should be in the revenue section. I know in the book it talks about having an expense provision for bad debts, but that's actually changing now. There are still companies in the industry that put it as an expense, and they can kind of choose which they'd like. But for this test, I'd like you to put it in the revenue. So what you'll do is you'll put gross patient service revenue, and then have provision for bad debts, which is a deduction from gross revenue. So let's say gross patient service revenue is $500,000, and then provision for bad debts is $10,000. with net patient service revenue as 490,000. And if you guys want to see that, I can share my screen with you, and we can open an Excel sheet and show you real fast. Let's do that. Oh. All right. Okay, do you guys see my screen?
Yes.
Yeah, you can? Okay. So let's just look at page 85. If you guys have your textbook with you, you can open it up there. And notice on that example, provision for bad debts is listed in the expenses. For this purpose, what we'll do is we'll have revenues, and then maybe we'll have patient service revenue, which will be, let's say, let me do this real quick. The patient service revenue, $500,000, and then you'll have provision for bad debts here. And let's say again that's 10,000, and that is a deduction from our gross patient revenue. Here we go. So then what we'll have is net patient service revenue, which is simply going to be your gross minus your provision. So 490 gets you the net patient service revenue. Does that make sense, everybody?
Yeah.
Okay. Make sure you don't put it there and add it to your revenues, because that will throw off your net income at the end. But afterwards, we'll then have like other revenues. Let's say that those are 35,000, and then we'll have total revenues, and that's going to be your net plus your other revenues. So there's our total revenues there. Next comes expenses, and we'll have salaries and benefits, salaries and wages, and that can be whatever we want it to be. 95,000. How about? We'll have a supplies expense of 50,000. Oh, that's not supposed to be 95,000. There we go. And we've got an interest expense of 38,000. And then maybe we'll pay for insurance. Whatever items you might have for your sheet. And on the test, there'll be a whole list for you. You'll simply have to arrange them in the correct order on your sheet according to your statements. So 210,000. Let's actually make this a little bit bigger.
Does it matter the order? So if you put supplies before salaries, would it really matter?
You know, I don't think that there's really a rule. I think generally you go from greatest to smallest on expenses.
Okay.
But I won't dock any points for them being in the wrong order on the test.
Can you list your provisions for bad debts as negative 10,000?
Yeah, you can do that if you want to put it in parentheses. That's what Excel will do. Or if you actually put negative 10,000 on your sheet, either way you can do that, and then that kind of shows you, you know, what you're left with.
Excellent. It
So then
changed
that
your
means
net
that-
patient.
Yeah. That means you'd have to add the negative 10,000.
Right. So provisions for bad debts
Just 'cause of your formula.
section is a deduction from your gross patient service. So just make sure, however you want to make it negative, or remember that. So this then equals this. plus this, which gives us that 490 again. Okay. Once you've got all of your different expenses listed, of course you have total expenses. And that is just going to be all of your expenses added up. And you guys can either type this in on the test. I know that the window is really small on either, and it doesn't give you a whole lot of room to see what you're doing. So if you type it up like this in Excel and then copy paste, that worked for me when I was in the class. I've heard of 1 or 2 students that didn't quite work for them, but it should work overall for everybody. So go ahead and do that if that's easier for you. So now we've got our non-operating income, or excuse me, our operating income, which is our total revenues minus total expenses. Next, we'll have a non-operating income section. So things that will go in here are typically things like investment income. So maybe the hospital bought stocks in another company which paid dividends. Or maybe they've invested somewhere else in bonds and they received an interest payment, things like that. Investment income is a non-operating income. So let's say that we made $12,000. And then contributions as well are another one that you'll find here, a non-operating income. Let's say that somebody gave us $5,000. So then you'll have an item for total non-operating income. Which is going to be just all of your items there. And finally, the bottom line is our net income. And that's going to be our operating income plus total non-operating income. So our net income is $294,000. Let me see if I can minimize this so you can see the whole thing. I know it's kind of small. Sorry about that. I guess it's not going to work out too well. So there's an income statement. Do you guys have any questions about the income statement or how to set it up? Okay. Then let's talk about a couple of the things that you need to be able to solve from the income statement. First, you need to be able to tell me what the operating margin is, and you'll need to understand what it means. So the operating margin is your operating income, which is here. I'm going to go ahead and put this over here to the side. Operating income, or excuse me, operating margin is what I want. Okay, so your operating margin is going to be your operating income divided by your total revenues. Can anybody tell me what the operating margin tells us? Anybody?
It's like, is it your ratio that tells you how much of your net income, well, of your revenue is coming from operations like patient services and things like that?
Exactly. So it tells you what percentage or how much per dollar of revenue is going to transfer to profits. So right here, we've got an operating margin of 0.527. So I know that 52.7% of every dollar that we are bringing in revenues will translate to profit in the operating income. The closer this number is to 1, the more profitable your business is in its core activities. The second thing that you guys need to be able to find from the income statement is the cash flow. Now I'm sure that there's some crazy hard uh, equation to get a very accurate number, but you can get a rough estimate simply by taking your net income here and you add, oh, you know what? That is actually one thing I didn't put on here. One expense that you'll often see is depreciation expense. I'm just going to go ahead and scooch these down a little bit. Depreciation. So let's say that I've got 14,000 in depreciation. And see how everything changed there. So for cash flow, you want to take your net income and you want to add back any non-cash expenses. In this class, the only one that we are going to deal with is depreciation. Another example of a non-cash expense might be like amortization, but we won't ever see that here. So just remember, net income plus depreciation gives you your cash flow, and that gives a more accurate picture of the cash coming into the company. And that, sorry, go ahead.
Is that just because your depreciation is extended over a period of time? For example, like if you buy a machine that depreciates over 10 years, you're gonna make that an expense, 10,000 each year, but you paid that at the very beginning. Is that
right? So depreciation is used to show, it's kind of got two purposes. So when you buy a fixed asset, let's say that you buy a new MRI machine for $1.2 million, you pay that whole amount as soon as you purchase the machine. But rather than listing that as an expense, that would be a huge expense on your income statement. So you use depreciation as a method to, first of all, show the wear and tear, as you said, over the useful life of the asset. But it's also so that your statements are in accordance with GAAP principles. If you remember GAAP from chapter 3, the generally accepted accounting principles, there's the cost matching rule. And that cost matching principle or rule says that to the extent possible, we need to try to match the costs of our assets to the revenues which they create, or the period in which they create revenues. So depreciation also helps with that. But yeah, the reason that it's a non-cash expense is because we already paid that 14,000 at the very beginning when we purchased the asset. So even though there's an expense for 14,000, we didn't actually lose $14,000 in that period. We already paid that 2 years ago or 5 years ago or however long ago we purchased the asset. Good question. Any other questions? No? Perfect. I will continue on then. I did something on my screen and I don't know how to get back. Here we go. Stop share. Okay. So after an income statement, you need to be able to create a balance sheet. That's the next thing, and that was chapter 4. And that's going to be on page 112 as a good example there for a balance sheet. And if you guys would like, we can go ahead and look at one as well and create one. So a balance sheet, one important thing to remember is what's called the accounting identity. And that is something you will always use. It's assets equals liabilities plus equity. So if you remember, the balance sheet has two sections, the assets side and the liabilities and equity side. If your totals don't equal each other at the end of your statement, you've done something wrong. Either your numbers aren't in the right place, you've done your math wrong in computing the totals, or something like that. Because assets will always equal liabilities plus equity. They should always. So let's go ahead and, I'll share my screen with you again. Let's go ahead and create a balance sheet. If you guys have your books, we can open up to page 112. I'll pretty much just be taking a lot of the line items out of there. Okay. So our balance sheet, the first thing we're going to do is our assets. You always start with current assets, okay? Current assets, can anybody tell me what those are?
Cash or things that convert to cash in less than one time period, usually a year.
Right. Things that are cash or will be cash within one accounting period, and that's most often 1 year. So the first thing that we're going to list, of course, then is cash or cash equivalents. And maybe we've got, you know, let's say we've got 50,000. Accounts receivable is another one. You guys know what accounts receivable is?
It's like money we're waiting on to get from patients or third-party payers.
Exactly. We've provided services and we now billed them for the services that were provided and we're waiting to collect. Those typically are collected within one accounting period. Now we'll have short-term investments. Again, short-term meaning it will be collected within an accounting period, generally speaking. Next we'll have inventories. This is one that people tend to mix up or put in the wrong place, is inventories. Inventory is also a current asset. So I know with hospitals and things, we don't typically have inventory because we don't sell products, we sell services. But when we do have things, or if we have a pharmacy in the clinic or the hospital where you work, you might have an inventory list somewhere. So that is a current asset. Next, you will have long-term investments. Which again are things that will be collected after one accounting period. Like maybe you've got bonds that you bought that are going to mature in 5 years. Those are long-term investment. Usually you can just put them on one line unless you've got a whole bunch of different ones. Then you might want to list them separately. And next we've got net property and equipment. So these are things generally that are not related to the business, to the core activities, or things like inventory. This is going to be your buildings or the land that you own, or maybe you have a couple of trucks that you use to ship things around between your facilities, things like that. That's going to be net property and equipment. Okay, and then you're going to list total assets down here. Oh, one sec, I did forget one thing actually. Make sure that you put a total current assets in here. Okay, so your total assets will be your total current assets plus long-term investments plus property and equipment. Okay, so there's our assets side. Next, we'll have liabilities and equity. We'll start with liabilities. Can anybody tell me what the definition of a liability is from the reading? I think there's a question about it on the test.
Liabilities are bills or things you owe.
Right, things you owe. So the fancy or the correct way, I guess, that the book tells it is liabilities are, what does it say? That's fixed by contract. So that's one of the differences between equity and liabilities, that liabilities are fixed by contract. You have a working contract that you're going to receive a loan with promise to pay it back. with interest, things like that. Okay, so liabilities. We'll start with current liabilities, which again are things that will be called for within one accounting period. We might have things like notes payable. People bought bonds from us. We issued debt and it's time to pay them out now. That's what bonds payable would be. Let's say we've got 15,000 in that. We've got accounts payable. That's where people provided a service for us and now we have been billed and we need to pay that up. The 8,000 there. And maybe we'll have accrued expenses. $2,000. And then total current liabilities. It's just going to be all of your current liabilities here. Next, we'll have long-term debt or long-term liabilities. And let's say that we've got, I don't know, 6,000. And now our total liabilities is going to be our total current liabilities plus our long-term debt. Now let's make this number just a little bit bigger too. Let's say we got 18,000. So now our equity, which is also sometimes called net assets if you're in a not-for-profit hospital, needs to finish the balance so that when we add it back to our total liabilities, the total should equal what we calculated for our total assets. So we should be looking at, let's see, I think we're looking at 67,000, right? And then our total liabilities and equity is just going to be here. Total liabilities plus net assets or equity. So again, our accounting identity equation is that assets equals liabilities plus equity. So if we have 110,000 for our total assets here, we should also have 110,000 for our total liabilities and equity at the bottom. If those don't match, something is missing. We put a number in incorrectly, or we put one of these items that should have been in assets down in the liabilities or something like that. So it's a good way to check yourself and go back and look at your balance sheet. Any questions about the balance sheet? Okay. There are a couple,
I just wanted to clarify if there were any other things that might go under like net assets. Obviously this example just uses net assets, but would you, I can't remember what else you could put shareholders stock, shareholder stock, and then something else. I don't know if those go under equity too. Retained earnings. Sorry.
Retained earnings and common stock probably is what you're thinking.
Okay. So those are some things that can go under there.
Yeah, I think in this class on the test and everything, you'll just see it like this, just the one line item is the net assets, equity. But yeah, those are things you'll generally find. Can you guys tell me which statement or financial statement takes the net income and shows how much will be retained in the equity of the company?
The balance sheet?
The balance sheet shows your assets and liabilities. So the statement I'm looking for is the statement of changes in chapter 3, at the very end of chapter 3. And that one you don't need to create for this test. I think you might need it for the final, so make sure you understand that. But that one shows how much of the net income translates to retained earnings or equity in the company. That's the statement where you might show dividends paid, things like that. Any other questions before I talk about what you need to calculate here?
Jordan asked in the chat window, will we have to create a full balance sheet for the test?
Yes, you will need to create a full balance sheet. Just like the income statement, everything will be given to you, all of the line items. You'll simply need to put them in the right orders. And you'll need to calculate like your total current assets. They're not going to be given to you because we want to make sure you're going to put the assets where they belong, and then you can calculate for yourself the total current assets and the total assets. And then you'll need to put in the correct locations notes payable and accounts payable, and then calculate what are your total current assets going to be. So you do need to create one, but all the line items will be given to you. There aren't going to be any surprises. And once again, you should be able to type it up in a balance sheet like this, or in a spreadsheet, and copy and paste into the window on the test. And that makes it a little bit easier. Good question. Any other questions before I talk about what to calculate? Awesome. Okay. So from the balance sheet, you need to be able to calculate net working capital. Does anybody know, before I tell you, how to calculate net working capital?
Is it total assets minus total liabilities?
Close. Very
Is
close.
that another one? Or is it,
It's current, isn't it?
oh, is it current assets?
Current asset
Oh,
minus current liability.
okay, okay.
Okay. All right, so net working capital then is going to equal total current assets, which are 93,000 there, minus total current liabilities. There we go. Net working capital just kind of shows us if we needed to get cash quickly, or if we needed to pay off our current debts and things, do we have the capacity to do so? All right, the second thing that you need to be able to calculate from the balance sheet is your debt ratio. So again, can anybody tell me how to calculate it before I tell you? Anybody know?
Isn't it your total liabilities divided by your total assets?
Yes, it is, exactly. Total liabilities divided by total assets. That would be total liabilities down here. That's including long-term liabilities and long-term assets. I guess I actually need to add that item here real quick. That should be something you have on your balance sheet. I'm so sorry that I left that out. Oh, I did have it. Here we go. Total liabilities. Okay, so total liabilities divided by total assets. Now, can anybody tell me what this tells us? It's kind of similar to the operating margin. Similar principle, but tells us something a little bit different. Okay.
Does it show us what how much of our total assets are, they're not ours, but they're the whoever we owe it to?
Yes, that is correct. So the debt ratio tells us how much of our assets are financed by debt.
Okay.
Okay, and those are things that you need to know for the test. that is it for the problems. That's all that you'll be going against for this test. Now, if you guys have any other questions or things about the test, any materials within the chapters that you feel uncomfortable with, feel free to ask any questions. We've got 20 more minutes here, and we've kind of covered some big things. But anything else you guys have questions about?
I'll be the first, I guess. I
Okay.
never really understood what going concern meant. What I have written is it assumes that the accounting entity will have an indefinite life.
Okay. So that is exactly what it means. The going concern means that you assume when you're creating statements that the value of the asset is valued for a business that's going to continue to operate and use that asset.
Okay.
Okay.
Perfect.
So that asset's going to create revenue for the company. So it's got a little bit more value than just what might be left. It has a resale value at the end of the useful life, those kinds of things. So you just assume that the business will never go out of business. Any other questions?
Okay.
I can try to get a more clear explanation of that for you, and maybe I can email it to you, or if I see you on campus or something, I'll give it to you.
Very good.
Okay. Anybody else have any questions?
You said we would have to calculate the after-tax yield. Is that what you said?
Yeah, so there's a problem where it says like so-and-so hospital made this much net income in the accounting period last year. Like let's say they made $5 million. That's a huge number, but let's just say $5 million in net income. But they are in a 33% tax bracket. How much after-tax income do they have?
So you're basically calculating the tax and minusing it from their income?
Exactly.
So 335,000.
Okay, that's easy enough.
Yes.
One of my other questions. Oh, let me find it real quick. There's a question on, I think it was chapter 2 reading outline. Says, are there substantial differences between the financial and the finance goals of an investor?
That was actually a typo in the instructions.
Oh, okay.
So those questions are found at the end of the textbook. I caught most of them last semester, and they've mostly been fixed in iLearn. But there are still some that we submitted course corrections for that didn't get done. So I told him about that one again.
Okay.
But the question should have read, are there significant differences between the financial goals of a not-for-profit hospital and an investor-owned hospital?
Hmm.
And the answer, you know, the answer is, Connor?
Well, the investor wants wealth maximization, but the not-for-profit wants to provide the best services to the community.
Right. So that's the main goal, I guess. The main goal for not-for-profit is simply to be financially viable,
Okay.
to continue fulfilling its mission. So yeah, its mission statement generally defines what its main goal is. But the primary goals, they really aren't substantially different. Both types want to maintain financial viability so that they can continue to progress towards their goals, to fulfill their goals, whatever they might be. Does that make sense? So while they might have specific things and missions and values and goals for their individual organization, the overarching goal is to be profitable, to keep operating.
Okay. So like the main goal is what I said, but the financial goals is to just be financially viable, keep making money, making sure that you don't close down.
Right. Continue
Okay.
achieving their organizational goals, things like that. whether that's growth or wealth maximization or providing a certain amount of free services to the community, those kinds of things.
Good deal.
Good question. Anybody else have a question?
I gotta go. So
All right.
thanks, Tyson.
Good questions. Oh. All right. Andrea, do you have any questions for me?
I think you covered most of it. I'm just looking back through my notes to make sure there's nothing else.
Okay.
Did Camille leave already?
Yeah, it looks like Camille and Connor both left, as well as Jordan is gone now.
All right. Well, I think I'm good. Thank you so much.
You're welcome. Good luck studying. If you have any other questions, you can feel free to email me what those are, and I'll try to get back to you quickly as you study for the test.
Perfect. Thank you.
You're welcome. Have a nice night.
You too.
Okay, everybody. Nobody else came to join the open lab for the last few minutes, so I'm going to go ahead and wrap it up and post it online. Those of you that did come, thank you for coming. Thanks for your questions. Good luck, everybody, studying on the test, and I hope that this open lab was helpful for you. Good luck.